This is India's #1 news network, and you're watching News9. English news as it should be.
Good morning, you're watching News9. I'm Kartik Malhotra. The crisis at Indigo continues with flight cancellations, though lower, still continuing to dominate airports in India. Meanwhile, the government is saying it is all ready to set an example of Indigo. Indigo has apologized, but the government says that it could give up 5% of Indigo's flight share to other airlines. That's the big story that we're tracking for you this morning. Coming up also on the show, Donald Trump is taking a dig at India's rice exports to the US, alleges dumping of Indian rice into the US. Is that the next target for President Donald Trump? And of course, we will also bring to you the latest pot boiler brewing in Hollywood. Who's going to acquire Warner Brothers and Discovery? Is it going to be Netflix with its $72 billion offer? Or is it going to be Paramount, the company run by David Ellison, which could potentially make its hostile bid even more hostile? All these stories and more over the next 1 hour. You're watching Morning Brief at 9. This is Morning Brief at 9 this Tuesday morning. Here are the headlines that we're tracking for you. The Directorate General of Civil Aviation receives Indigo's response to show cause notice over nationwide cancellations. Airline CEO and COO reportedly summoned for questioning as enforcement action looms. Moody's warns Indigo may face financial hit and DGCA penalties after week-long cancellations. Tariff tensions rise yet again as US President Donald Trump considers duties on agriculture imports from India and Canada, saying falling US farm prices and stalled trade negotiations need action. Meanwhile, the Kremlin says India is free to buy oil where it benefits most. Confident energy trade with Russia will continue despite US sanctions. Commerce and Industry Minister Piyush Goyal and EU Trade Commissioner Maros Sefcovic hold talks in Delhi to push India-EU FTA forward with key issues on steel, carbon tax and auto duties still unresolved. India and Chile review progress on proposed CEPA, affirm commitment to conclude trade pact soon after constructive fourth round of negotiations. Parliament clears Pan Masala cess bill to fund national security and public health. India targets space station by 2035 and hopes to land Indian astronauts on the lunar surface by 2040 as space push accelerates. And finally, Starlink announces 8,600 rupees monthly plan for satellite internet in India with unlimited data and 99.9% uptime. Our top story this morning continues to be from Indigo. The Directorate General of Civil Aviation has confirmed that Indigo has submitted its initial response to the show cause notice issued over last week's massive flight cancellations that left lakhs of passengers stranded. Now, in its response, Indigo has sought more time to file a detailed explanation, saying it is not realistically possible to pinpoint the exact cause at this stage due to the scale and complexity of operations. The airline has blamed a mix of factors, including minor technical glitches, winter schedule changes, bad weather, increased congestion, and the rollout of Phase 2 of the flight duty time limitation rules, which have affected crew availability. Now, Indigo says it is preparing a detailed root cause analysis and pointed out that DGCA rules allow up to 15 days for such responses. The regulator, however, has stated that enforcement action will be taken after examining the reply. The airline has also expressed regret and apologized for the inconvenience caused to passengers. Meanwhile, according to reports, the DGCA's 4-member inquiry panel has summoned Indigo CEO Peter Elbers and COO Isidro Pordoqueras for questioning, likely tomorrow at 11 a.m. The panel will assess manpower planning, rostering and compliance with duty time norms that many believe triggered the operational meltdown. Remember, more than two-thirds of Indigo's 2,300 daily flights were cancelled on December 5th. The government has hinted at strict action to set an example for other airlines. So far, nearly 9.5 lakh tickets have been cancelled since November 21st, with refunds now crossing 827 crore rupees. Indigo says operations are stabilizing, cancellations are reducing, on-time performance is improving, and over 4,500 stranded bags have been returned to passengers. But the crisis has taken a financial toll as Indigo shares crashed over 8% on Monday, its biggest fall since February 2022. And over the last 1 week, Indigo shares are now trading more than 15% down. Meanwhile, Civil Aviation Minister K. Ramohan Naidu has said the government will curtail Indigo's winter flight schedule and those slots will be allocated to other airlines, a direct consequence of the carrier's massive operational disruptions last week. The minister said Indigo currently operates around 2,200 flights and these routes will definitely be reduced. Now, on baggage recovery, the minister said 6,000 to 9,000 bags have already been returned to passengers, with the rest expected to be sorted out as early as possible. Listen in to the minister.
DGCA has sat with all the airlines wherever there was no compromise on the safety after thorough consultation and after thorough safety risk assessment. Necessary variations, necessary exemptions have been given beforehand itself. And on 1st of December also, this was on 1st of November. What Honorable Member has also observed, we are talking about December 3rd, after 1 month. So there was 1 full month of operations in the new FDTL also. Why I am mentioning this point, even though we are saying because of the FTTL this situation has arisen, there have been a lot of internal complications. This is a day-to-day operations thing that the Indigo should have maintained. Indigo was supposed to manage the crew, was supposed to manage the roster through its day-to-day operations. We are there to check if the FDTL is properly implemented or not, and there has been no compromise on that side. And for 1 thorough full month we have been observing. On 1st of December we had a meeting with Indigo on FDTL itself. When they required some clarifications, we have given the clarifications also with that idea, and they have not flagged this issue.
Meanwhile, Moody's ratings has called the ongoing flight disruptions at Indigo credit negative, saying the airline's failure to prepare for new aviation duty time regulations announced over a year ago has triggered widespread cancellations and could lead to revenue losses, compensation payouts and even potential penalties. Moody's noted that Indigo's lean operating model, efficient in normal conditions, lacked resilience to absorb the new Phase 2 FTTL norms, which classify midnight to 6 a.m. as night duty and cut permissible landings per day, marking them among the strictest globally. Now, this, combined with winter weather and congestion, resulted in over 1,600 cancellations on December 5th alone, with more than 500 cancellations still continuing as of yesterday, that's Monday. And moving on now, US President Donald Trump indicated that he may introduce new tariffs on agricultural imports, particularly Indian rice as well as fertilizers from Canada, as trade discussions with both countries continue without major progress. Trump made the comments during a meeting at the White House where he unveiled a $12 billion fresh support for American farmers. He said imports were challenging domestic producers and reiterated his intent to address the issue. The president said he would take care of alleged dumping of Indian rice into the US. Farmers have pointed to falling rice prices, claiming imports from countries like India, Vietnam and Thailand are undercutting their crops. Remember, these remarks come amid ongoing economic pressures, including concerns about inflation and consumer prices. Negotiations with both Canada and India aimed at stabilizing trade ties have encountered difficulties. Earlier this year, Trump imposed 50% tariff on Indian goods, citing trade barriers and energy purchases. The US delegation is expected to visit India this week for further talks, although no major breakthrough is anticipated.
But I wish I was here under better terms. I'll tell you, I think the rice industry thanks you sincerely for what you have done for the California rice market and to Japan. It has been monumental for our industry. But us in the South are really struggling. I mean, this is not just a crisis. I would say it's almost a market dynamics that really are true anti-competitive nature, right? So it follows what you sent out this weekend. And we do believe that countries are dumping rice into this country today. We've never seen imports this great.
Which countries?
India, Thailand, even China into Puerto Rico. Puerto Rico used to be one of the largest markets for U.S. rice. We haven't shipped rice into Puerto Rico in years. So this has been happening for years. This didn't start during your administration, but unfortunately, we're seeing it in a much bigger way now. The tariffs are working, but we need to double down because
you want more. I mean,
well, they're cheating, right? They're they're just subsidizing and then
India. Tell me about India. Why is India allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India
now.
Give
me the countries, if you could. Go ahead. India. Who else?
So India.
Mark it down. Which is good?
Yes, sir. India,
Thailand, China into Puerto Rico, not into continental U.S., but into Puerto Rico. Those are the main culprits.
So Puerto Rico used to do a lot of business, and now you
100%. Puerto Rico was U.S. based.
All right.
And
so easy to settle.
All right, and staying with other trade deals, the Kremlin has reiterated that India is a sovereign nation and free to purchase oil from any source it finds economically beneficial, including Russia. Now, the statement came from Kremlin spokesperson Dmitry Peskov on Monday, days after Prime Minister Narendra Modi and President Vladimir Putin held talks in New Delhi. Peskov said Moscow is confident India will continue to prioritize its economic interests and maintain its energy buying policy based on what suits the nation best. Now, this comes amidst the US imposing additional tariffs on India. Despite Western pressure, Russia remains one of India's top crude suppliers since the Ukraine conflict began in 2022. But in the month of November, official data confirms India has not purchased any Russian oil. Russian President Vladimir Putin, after his meeting with Prime Minister Modi, reassured that Moscow will remain a reliable energy partner for India. Russian officials also hinted that they are prepared to deal with sanctions if needed, with Kremlin economic aide Maxim Oreshkin saying Moscow has long experience in overcoming restrictions and will find ways to supply crude if India is willing to buy. Meanwhile, India and the European Union have taken yet another step forward in negotiations for a long-pending free trade agreement as Commerce and Industry Minister Piyush Goyal met EU Trade Commissioner Maros Sefcovic in New Delhi on Monday to discuss issues that are holding up the deal. Sefcovic is in India with a high-level EU delegation for what he described as a two-day marathon of meetings aimed at advancing trade and investment talks with India. Both leaders called the discussions productive and reaffirmed their commitment to concluding the free trade agreement at the earliest. However, several key issues remain, including steel, carbon tax, automobile duties and non-tariff barriers. The European Union has been seeking steeper duty cuts on cars, medical devices, wine, spirits and meat products, along with stronger intellectual property protections. The India-EU FTA talks resumed in 2022 after an 8-year pause, with bilateral goods trade touching over $136 billion last year. The EU is now India's largest trading partner. A successful pact could make Indian exports from garments and pharma to steel and electrical machinery more competitive in European markets. And it seems to be a news day of more trade talks. India and Chile have taken another step forward towards a potential trade agreement as both sides reviewed the process of and the progress of negotiations for a proposed Comprehensive Economic Partnership Agreement or CEPA. The talks took place in New Delhi between Commerce and Industry Minister Piyush Goyal and Chile's Treasury Undersecretary for Foreign Affairs Claudia Senhuaza. Now, this meeting comes just days after officials from the two countries concluded the fourth round of CEPA negotiations on December 5th. The latest round ran for 5 days and, according to the government, saw intensive and constructive discussions across several chapters. Officials say substantial progress has been made, indicating growing momentum in the trade dialogue. In a joint statement, both sides reaffirmed their commitment to concluding the CEPA negotiations in a timely manner. Now, once finalized, the pact is expected to give a major boost to bilateral trade, improving market access, deepening economic cooperation, and opening new opportunities for businesses on both sides. The two nations are now expected to continue technical consultations with more rounds of negotiations likely in the coming months. Both governments have emphasized that the CEPA could become a key pillar in strengthening India-Latin America economic ties. Parliament on Monday cleared a bill to impose a cess on pan masala manufacturing units to help fund national security and public health. The Rajya Sabha passed the Health Securities and National Security Cess Bill, sending it back to the Lok Sabha after approval last week. The new cess will be charged over and above GST based on the machine production capacity inside pan masala factories. Responding to the debate, Finance Minister Nirmala Sitharaman said the revenue collected will specifically support health and national security expenditure. Listen in.
The purpose of this bill, sir, is to create a detailed, predictable, dedicated resource stream for two domains of national importance. One is the health security. Given the significant public health burden generally, as well as that which specifically arises from the consumption of demerit goods like pan masala, and national security, which requires a sustained investment to keep pace with evolving national security needs. It's not an essential commodity. The cess is not on an essential commodity, and it doesn't envisage any future when it may have to be placed on an essential commodity. But it is specific on a particular and a specific demerit good. This tax, or cess as I call it, is more to be a deterrent for those who tend to use these demerit goods, and it certainly doesn't burden ordinary citizens on their essential daily consumption.
All right, moving on now. India is ramping up its space ambitions with plans for a sustained presence on the moon within the next decade. Space Minister Jitendra Singh said that India aims to have its own Bharatiya Antariksh station by 2035 and hopes to land Indian astronauts on the lunar surface by 2040. The push aligns with Prime Minister Modi's vision of making India a developed nation by 2047 and of narrowing the gap with space powers like China, which already has a station in orbit and is planning a moon mission by 2030. Now, Singh said India's space economy, once limited, has surged to $8 billion after opening up to the private sector and could reach $40 to $45 billion in the next decade, powered largely by nearly 400 space startups working on satellite launch vehicles and space data tech. And staying with the same space territory, Elon Musk's Starlink has finally revealed how much its satellite internet service will cost in India. The company's website now lists 8,600 rupees per month for residential users, offering unlimited data, a 30-day trial, and what it claims to be weather-resilient connectivity. However, customers will need to pay an additional 34,000 rupees for hardware installation, making the initial setup significantly pricier than other Wi-Fi service providers. Now, Starlink is yet to disclose pricing for its business plans in India. The development comes months after the country's space regulator granted the firm approval to launch commercial operations, a clearance Starlink has been waiting since 2022. Now, with this rollout, the satellite internet segment is expected to heat up as Starlink competes with Geo SES and Eulosat OneWeb, both gearing up to offer similar high-speed space-based connectivity. The government is still deciding whether satellite spectrum will be allocated administratively or through auctions. Starlink will also need to set up ground infrastructure and continue security tests and trials, some of which reportedly began in October before full services go live nationwide. With that, we will slip into a very short break. But coming up on the other side, Rohit Srivastava from India Charts is standing by to tell us all about how markets are likely to perform today. Remember, the Nifty 50 has opened in the red yet again today, down about 0.5 percentage point from yesterday's close. But it also happens to be the day of the Nifty expiry. So we'll get the expert view from Rohit Srivastava after this very short break.
Powered by Servo Hypersport F5 when speed is your default.
25 लाख का हॉस्पिटल बिल है, इतने पैसे कहाँ से आएंगे?
पैसों की चिंता आप मत कीजिए पापा।
मैम, सर का हेल्थ इंश्योरेंस क्लेम अप्रूव हो गया है।
आप
पॉलिसी बाजार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
बढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
Our very first Business and Economy Literature Fest 2025 on the 20th and 21st of December at Taj Talkutir, Kolkata.
EIILM presents Balmer Lorry, Associate Sponsor. Mukhara Chowk, Associate Sponsor. Alliance Broadband, Associate Sponsor.
We are back. You're still watching News 9. This is Morning Brief at 9. Time now to get you all the cues from Dalal Street as markets have opened about 7-8 minutes ago, and it seems that the red that we saw in the markets yesterday, especially in the second half of trading, continues to dampen the mood even today. Sensex and Nifty 50 both trading about 0.5 percentage point lower than yesterday's close, which in any case was a pretty steep cut that we saw. As things stand right now, Nifty 50 below that 26,000 level and Sensex now well below the 85,000 levels. At exactly 9:20 a.m. Sensex was trading at 84,712 levels, significantly almost 300 points below that 85,000 mark, and Nifty 50 down about more than 170 odd points from the 26,000 mark. So markets not in a good mood. Remember, this also happens to be the day of the Nifty expiry. So there could be some trading action which is reflecting in the mood on the Dalal Street this morning. And meanwhile, talking about traders, volatility in the Indian market is slightly higher this morning, crossed that 11 mark, up about 0.5 percentage point or so, which means there is likely to be more ups and downs visible in trade this morning. Let's cut now to the Nifty 50 heat map and see which other sectors are there. Any sectors in the green at all? And it seems apart from just a few handful of stocks, Bharti, Airtel, Hindustan, Unilever, there doesn't seem to be any stock which is performing in the green this morning. The advanced decline on the Nifty 50 index seems to be heavily in favor of declines this morning. Look at the IT sector. TCS is down about almost 1%, 0.9% or so. Eternal is down about 1.35% in trade. Reliance is down about almost about 1% or so. Meanwhile, even the banking sector is continuing with its steep cuts in trade this morning. look at the consumer durable space. In fact, we saw yesterday deep reds even in the consumer durables, the auto space, and that auto space continues to be reeling under some sort of pressure this morning. Mahindra & Mahindra is down about 0.8%. Maruti Suzuki down about 0.5 percentage point or so. Rohit Srivastava, founder and market strategist at India Charts, joins us this morning. Rohit, good morning. Thank you so much for your time. What are you making of the mood on markets this morning? Is it just a nifty expiry because it's Tuesday and hence the selling pressure, or is there more to read into it, especially Donald Trump's latest trade sort of remark on India, saying that India is dumping rice on the US, making the possibility of that all-elusive trade deal even more further distant than what it is now?
So the trade deal has been an overhang since July. However, markets did manage to recover quite meaningfully since October, and we almost touched the all-time highs. What has happened then is we've actually not surpassed that as far as the main index is concerned. But more importantly has been the weakness that we saw initially only in the small cap indices. But yesterday that started to spread to other parts of the market, including the mid caps. We are still not seeing that level of weakness in maybe the Nifty or Bank Nifty. So it's a little early to say whether it's going to be a much more broad-based sell-off or only contained within the small and mid-cap space. But the next 2 days are going to be important in making that judgment. At this particular level, the Nifty is at a very good support, which is between 25,800 and 25,770. My sense is, at least for the day, it looks like that range will hold. You might potentially see a bounce back from there. And what we'll be watching for is whether that bounce manages to show the strength required to continue the upward trend or not. Because if there's any failure, then that is when we'll say that it's shifted from the weakness that we saw in small and mid caps is starting to show up in large caps as well. So that is the watch out for the next 2 days. But I think right now Nifty is getting close to a very good support from where you can get a bounce at least in the day or two.
All right, a bounce expected hopefully in a day or two. I'm continuing to look at the banking stocks. You mentioned the BFSI space. I'm looking at the charts right now. We've seen that on Friday the RBI did go ahead and give that 25 basis point cut, but yet we saw yesterday, especially in the second half, banking stocks had taken a beating. Even today, their opening week. Now, tomorrow, India time, in fact, late night tomorrow is going to be the big FOMC outcome, which is likely to come through the week. Is the Indian banking space likely to get impacted by the actions taken by the US Fed?
Well, in a positive way, you see, rate cuts are going to be positive for both global markets, and it helps the Indian policymakers also continue with the rate cutting cycle that we are already in, which is actually good for interest rate sensitive sectors like autos, banking, metals, and could be eventually even for real estate, but it's not yet there. The main issue with rate cuts in India has been transmission, which is what the RBI governor mentioned both in the previous policy meeting and in this meeting. Last time he didn't cut rates. He said we need transmission. This time, though he's cut it, he said we need to focus more on transmission. So it's essentially, the idea is that when banks need to cut rates, they need to be able to manage their spreads, which means that their cost of borrowing also needs to come down at the same pace at which rates are coming down. That is the only risk. Otherwise, lower rates lead to more business, and that is the positive side for the banks.
All right. I'm looking now at the auto space, and again, a rate-sensitive, rate cut-sensitive auto segment. Do you think at this point valuations are conducive for long-term investors to dabble into some auto stocks, especially the homegrown ones, simply because now the rates are eventually going to get transmitted and they are going to be cheaper to get loans? In addition to that, of course, the GST relief and the year-end discounts likely to come, towards the end of December. Do you think all of this augurs well to pick up some auto stocks at the moment, given that we've seen few days of cuts on the valuations?
Yeah, I would think so. The auto index would have support close to around 27,150. That's the Nifty auto index. And I think close to that level, we should be thinking that it's probably bottoming. We have seen the auto index also outperform in troubled times, not just now, but also when you had the 21-22 correction. That time also the auto sector did better than the rest of the market, and we are seeing the same trend now, definitely helped by government policy, which already means that, given the festive season sales, you're going to get good numbers in January. So there's a reason why the auto sector will hold out better than many other parts of the market.
All right. Talk to us, Rohit, also about the energy space, because you're seeing Reliance Industries is down more than 1% in trade. ONGC is also down about 0.5% or so. And there are some reports about oil prices likely to fall below $60 by next year. That would be good news for India's inflation and India's overall trade deficit. But for stocks like Reliance, could that be a problem?
Not a big problem, but definitely puts some pressure, but it does help the oil marketing companies. So it's always this back and forth between marketing companies and refiners, but eventually Reliance has managed margins and spreads pretty well over time. I think oil prices, there has been a case where maybe it goes below, we were below 60, so does it go to the lower end of that range, to the $50 to $53 range? But that would be only the last sell-off that you probably get in oil. My sense was that it would happen probably when a ceasefire or some kind of a deal between Russia and Ukraine end up happening. That is the point at which you could see that downward reaction on oil. Otherwise, the downside is probably limited. Because there is a point at which producers would not want their prices to go below, and that's when they would be forced to hold back on production. But so far we haven't seen production cuts, and that's why oil remains at the bottom end of the range.
All right. And finally, I'm also looking at the Indigo stock this morning. Finally, does it seem that troubles at Indigo seem to at least be ebbing out, if not completely? One may not expect a complete revival immediately, but at least the troubles seem to be ebbing out. And the kind of corrections that we've seen and the kind of selling pressure we've seen on the Indigo stock over the last 5 to 6 trading sessions, it seems that today, with a flat second decimal point correction in the Indigo stock, and the commentary coming in from Moody's, does this mean that Indigo is unlikely to bounce back in the near term? Or would you suggest that perhaps, the 65% market share is not going anywhere and this could be a good valuation for investors to pick up Indigo?
So there are pros and cons both, but if we take a technical view on the Indigo stock, it's fallen for 6-7 consecutive days. We would think that it's very, very oversold based on the RSI indicator, and that typically calls for a bounce. Now, if there's any commentary even related to the airline resuming its flights, that would be a positive. The longer term question mark would be as to the impact on margins, profitability of getting in more pilots, the new norms, and how does it really impact the overall business. So that is something we really need to crunch the numbers on. It would have a medium term impact in terms of how the growth profit dynamics move. But once the airline is back on and flying, and it's not a case of shut down and going out of business, you will find that the stock bounces back from what looks like a very, very oversold condition.
All right. And finally, before I let you go, of course, the all-important FOMC, which commences tomorrow, and rate decision through the week likely to come out from the US. The IT sector is likely to be most impacted when you talk about business coming to Indian IT companies. What should the strategy be for investors this week after the US Fed has announced its rate decision?
So very near term, you have seen outperformance of the IT sector relative to Nifty over the last 2-3 weeks. That outperformance could continue for a while. So there is a trade in IT. I think I mentioned this the last time that there's a trade, but I don't know about long-term investing. And that trade might not be over because we are not completely seeing a full-blown rally yet in the IT stocks, but they are holding up much better than the rest of the market in this turmoil. And so I think they will still continue to do well into the year end.
All right, Rohit Srivastava, thank you so much for your time and for sharing all those inputs here with us and with all our viewers. Pleasure having you with us on NEWS9. Moving on now, the IPO of home and furnishings brand WakeFit Innovations opened to a modest response on day one, with just 15% subscription recorded on Monday evening. According to NSE data, the 1,289 crore rupee issue received bids for just 55.1 lakh shares against the 3.63 crore shares available. Retail investors led the interest with 73% subscription, with non-institutional investors subscribing only 7%. However, QIBs, or the qualified institutional buyers, stayed on the sidelines on the first day of the IPO subscription opening. Ahead of the IPO launch, Wakefit raised 186 crore rupees through secondary market transactions from marquee investors including Steadview Capital, White Oak Capital, InfoEdge and Temasek-backed Capital 2B, and earlier secured 580 crore rupees from anchor investors on Friday. Now, the public issue includes a fresh issue worth 377 crore rupees and an offer for sale of around 912 crore rupees, which will reduce promoter holding from about 37% to about 37% from earlier about 43.7%. Proceeds will fund store expansion, equipment, lease, marketing and general corporate needs. Now, founded in 2016, Wakefit is now among India's fastest growing organized home and furnishings brand, reporting 724 crore rupees revenue and 35.5 crore rupees profit in the first half of this financial year. Wakefit shares are set to list on December 15th. And we will slip into another short break, but before that, let's look at the global headlines you're following for you this Tuesday morning. US President Donald Trump says he has reached an agreement with China's Xi Jinping to let NVIDIA sell accelerated AI chips to China, a dramatic reversal of Biden-era restrictions aimed at limiting Beijing's military tech capabilities. Donald Trump rolls out fresh relief for American agriculture in the form of a $12 billion aid package, with farmers struggle as they lose export markets and higher costs tied to the president's sweeping trade war. Donald Trump accuses Mexico of violating a decades-old water-sharing pact and warns of fresh 5% tariffs, adding pressure to a neighbor already navigating wider trade tensions with Washington. Paramount launches a higher all-cash bid to take control of the iconic studio that owns CNN and Warner Brothers Discovery, with President Donald Trump personally monitoring the takeover battle amid concerns over competition in the streaming industry. Stocks across Asia, Europe and the United States drift lower as investors await signals from this week's US Federal Reserve meeting, which could set the tone for interest rates into 2026. US President Donald Trump blasts Europe's $140 million penalty on Elon Musk's platform X for breaching online content rules, calling it a nasty one and warning that EU is going in some very bad directions. European leaders publicly back Ukraine while raising doubts over parts of Washington's proposed peace settlement to end the Russia-Ukraine conflict, signaling unease about concessions that may favor Moscow. China's towering annual trade surplus crosses $1 trillion for the first time last month for the whole year. Export numbers at almost 6% in November as manufacturers redirect shipments away from the US, adapting to Donald Trump's steep tariff regime. Australian Prime Minister Anthony Albanese says the new first-of-its-kind social media law aims to shield kids from the harms of endless scrolling, forcing platforms to remove all under 16 users starting tomorrow, December 10th. These stories on the other side of the break. You're watching NEWS9.
Speed, it's relative. The more you speed up, the more the world slows down. And when you are fast enough, everything becomes still. That's when you see the world as it truly is. Servo Hypersport F5, when speed is your default.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
our very first Business and Economy Literature Fest 2025 on the 20th and 21st of December at Taj, Talkutir, Kolkata.
EIILM presents Bomber Lorry, Associate Sponsor. Mukhora Chowk, Associate Sponsor. Alliance Broadband, Associate Sponsor.
Welcome back. You're watching News 9. This is Morning Brief at 9. US President Donald Trump has announced a $12 billion relief package for American farmers, support aimed at offsetting the impact of his own trade policies. US agriculture has been hit by falling crop prices and billions lost in soybean sales to China after Beijing shifted to South American suppliers during stalled trade negotiations. Remember, even during his first term, Trump gave about $23 billion in aid to farmers hurt by his trade policies.
Delighted to announce this afternoon that the United States will be taking a small portion of the hundreds of billions of dollars we receive in tariffs. We are making a lot of money from countries that took advantage of us for years. They took advantage of us like nobody's ever seen. And we love our farmers, and as you know, the farmers like me, because based on voting trends, you could call it voting trends or anything else, but they're great people. They're the backbone of our country. So we're going to use that money to provide $12 billion in economic assistance to American farmers. $12 billion is a lot of money.
Staying with the farm space, US President Donald Trump warned that he may impose severe tariffs on Canadian fertilizers if he feels the move is necessary to protect domestic farmers. His comments came during an event at the White House where Trump also announced the $12 billion aid package for American farmers.
A lot of it does come in from Canada, and so we'll end up putting very severe tariffs on that if we have to, because that's the way you want to bolster here, and we can do it here. We can all do that here, but I would say what you do, you put very severe tariffs on from coming into other countries. You'll be making your own fertilizer.
And streaming wars are likely to get even more of a pot boiler than what they've been so far, as American mass media and entertainment conglomerate Paramount Skydance, led by none other than David Ellison, has launched now a hostile $108.4 billion takeover bid for Warner Brothers Discovery, a last-minute push to beat Netflix in a battle for Hollywood dominance. If successful, the deal would create one of the world's most powerful media and streaming companies. Take a look.
The battle for Warner Brothers Discovery may be far from over. In a stunning twist, Paramount Skydance on Monday launched a hostile bid worth $108.4 billion, aiming to outmuscle Netflix and challenge the dominance of the streaming giant. Netflix had appeared to win the bidding war last Friday with a $72 billion equity offer for Warner Brothers Discovery's TV, film studios, and streaming assets, including HBO and DC Comics. But Paramount's latest move raises the stakes dramatically. Paramount is offering $30 per share, all cash, for the entirety of Warner Brothers Discovery, providing shareholders $18 billion more in cash and an easier path to regulatory approval. Paramount CEO David Ellison also argued his offer would strengthen Hollywood and benefit consumers with more competition. Some analysts and industry experts see Paramount as the best suitor given Ellison's deep pockets, which are backed by his father, Oracle co-founder and world's second richest person, Larry Ellison. The elder Ellison also has close ties with the Trump administration. Netflix's bid, which comes with a $5.8 billion breakup fee, has already drawn sharp criticism from bipartisan lawmakers and Hollywood unions over concerns it could lead to job cuts as well as higher prices for consumers. President Trump also weighed in over the weekend, questioning the deal.
It could be a problem.
If Paramount succeeds, it would combine Paramount Plus with HBO Max, creating a formidable rival to Netflix, Disney Plus, and Amazon Prime Video. But Paramount's bid could also face its own level of scrutiny. A Paramount-Warner Brothers merger would boost its dominant position in the studio business, creating concerns over job losses as the industry rapidly consolidates. Investors are reacting. Paramount shares jumped as much as 7% Monday morning, while Warner Brothers Discovery surged 8% and shares of Netflix slipped about 5%.
And as the bidding war for Warner Brothers Discovery intensifies, US President Donald Trump says he's watching the takeover battle closely. Trump told reporters on Monday that neither Netflix nor Paramount Skydance are great friends of his after both companies placed rival bids for Warner Brothers Discovery. He said the deal is market sensitive and could affect competition in the US media industry, adding that he may personally monitor the process.
You support the Paramount bid for Warner Brothers?
I don't know enough about it.
You spoke about Netflix last night, saying you have concerns about them.
I know the companies very well. I know what they're doing, but I have to see what percentage of market they have. We have to see the Netflix percentage of market, Paramount, the percentage of market. I mean, none of them are particularly great friends of mine. You know, I want to do what's right. It's so very important to do what's right.
And US President Donald Trump has criticized €120 million, that's equivalent to $140 billion worth of penalty imposed on Elon Musk's platform X by European regulators last week for breaching online content rules. Now, speaking at the White House on Monday, Trump called the fine a nasty one and questioned how the European Union could justify the decision.
Do you have any reaction on the fine that was imposed to X by the European
For what?
Union? To X, to the platform X, the fine that the European
Union.
Union.
Pretty amazing. You're talking about, is that European Union or is it, who did that? European Union or UK?
The European Commission.
Whoa, that's a nasty one.
Do you consider it an attack?
Elon has not called me to ask for help on that one. But no, that's a tough thing. I don't think it's right. No, I don't think it's right. I don't see how they can do that. No. I'll speak about it later. I'm going to get a full report on it. Look, Europe has to be very careful. They're doing a lot of things. We want to keep Europe. Europe is going in some bad directions. It's very bad for the people. We don't want Europe to change so much. They're going in some very bad directions. That was a big thing.
And Wall Street closed lower on Monday, even as hopes for a December Fed rate cut strengthened after fresh data showed moderate consumer spending. But with one of the most divided Federal Reserves in years, investors are now watching closely for signals on what comes next.
Wall Street's main indexes closed lower on Monday, with the Dow dropping just under 0.5%, the S&P 500 shedding more than 0.33%, and the Nasdaq ticking down modestly. Treasury yields gained as investors waited nervously for the Federal Reserve's policy decision due on Wednesday. Rob Hayworth is Senior Investment Strategy Director at U.S. Bank Asset Management Group.
The down market today, I think, reflects two things. One, lots of uncertainty as we head into the Fed's meeting tomorrow with the conclusion on Wednesday. And two, higher interest rates are really starting to pressure those interest rate sensitive elements of the market, which is hurting elements like the Dow a little more than the S&P 500. So we're seeing a challenge really across that. And yet it was the interest rate sensitive elements of the market that have been the strongest performers to start the quarter. Utilities, healthcare, things like that. That's what we're seeing back off as investors just kind of probably retrench, waiting to hear what the Fed has to say about, is it one more cut and then we're going to take a pause, or is it one more of a series of cuts as we head into the end of Chair Powell's chairmanship in May?
Stocks on the move Monday included Paramount Skydance, which gained 9% after it announced its more than $108 billion hostile bid to buy Warner Brothers Discovery. The move was an attempt to outbid Netflix, which appeared to strike a deal with Warner Brothers Discovery last week. Paramount's announcement sent shares of Warner Brothers more than 4% higher, while shares of Netflix sank more than 3%. Elsewhere, shares of chipmaker Marvell Technology ended 7% lower after used car dealer Carvana beat it to securing a spot in the S&P 500. Carvana shares rallied 12%. And shares of Confluent soared 29% after IBM said it will acquire the data infrastructure company for about $11 billion.
And on to Asia now. China's towering annual trade surplus surpassed $1 trillion for the first time in November as a sharp drop in shipments to the United States was compensated by surging exports of almost 6% to other major markets. Chinese leaders are targeting overall growth this year to 5% and are expected to convene a key meeting this week focused on economic planning.
China's exports beat forecasts in November, driven by a surge in shipments to non-US markets. That's as manufacturers deepened trade ties with the rest of the world in light of Donald Trump's high tariffs. The world's second-largest economy has ramped up efforts to diversify its export markets since Trump took office again. It's been pursuing closer trade ties with Southeast Asia and the EU. Beijing had used Chinese firms' global footprint to establish new production hubs for low-tariff access. Customs data showed on Monday that China's exports grew 5.9% year-on-year. Imports were up 1.9%, almost doubling from October. The data showed Chinese shipments to the US dropped 29% in November year-on-year. That was even though the month began with news that the US and China had agreed to scale back some of their tariffs. Exports to the European Union grew an annual 14.8% last month, while shipments to Australia surged by over a third. It helped boost China's trade surplus to over $111 billion in November, the highest since June.
And moving on now, Ukraine's President Volodymyr Zelensky, speaking in London, said unity between Europe, the United States and Ukraine is essential as peace negotiations with Russia gain momentum. Zelensky's visit to the UK comes as Kyiv works to secure European backing for a pro-Ukraine proposal in the United States-led negotiations.
Britain's 10 Downing Street rolled out the red carpet on Monday for an urgent summit as the US steps up pressure on Ukraine to accept a proposed peace deal with Russia.
Is President Trump sidelining Europe again?
UK Prime Minister Keir Starmer welcomed his counterparts from Berlin, Paris and Kyiv to weigh US proposals that Ukraine concede territories seized by Russia as part of a peace deal. A list of US proposals that leaked last month alarmed European leaders with how much it appeared to meet Russian demands.
We stand with Ukraine, and if there's to be a ceasefire, it needs to be a just and lasting ceasefire.
Ukrainian President Volodymyr Zelensky on Monday said Ukraine, Europe and the US needed to stand side by side to ensure an end to the conflict.
I think unity between Europe and Ukraine, and also unity between Europe, Ukraine and the United States are something which we can't manage without Americans.
But German Chancellor Friedrich Merz warned that the US proposal was not perfect and stressed that stakes for Ukraine and Europe were high.
We all know that the destiny of this country is the destiny of Europe. So that's the reason why we are here. I'm skeptical about some of the details which we are seeing in the documents coming from the US side, but we have to talk about that.
That skepticism stretches from Downing Street to the front lines in Donetsk. In the city of Konstantinivka, Ukrainian soldiers move from anti-drone netting to bombed-out houses, trying to stay out of sight of Russian UAVs. This 32-year-old fighter gave his name as Dmitro. Commenting on the peace talks, he said, quote, "The demands are as if we started the aggression, not them." Ukraine is enduring one of the toughest stages of the nearly 4-year war. Russian troops are slowly grinding forward in the east, and Ukrainian cities and towns are suffering hours-long power cuts due to intensified Russian strikes on the energy grid and other crucial infrastructure. U.S. officials said they were in the final stages of reaching an agreement, but there has so far been little sign that either Ukraine or Russia is willing to sign the framework deal drawn up by U.S. President Donald Trump's negotiating team. A key demand from Kyiv has been that any peace with Russia must include Western security guarantees to deter Moscow from simply attacking again. Washington has so far dismissed that. I think they won't stop because the security guarantees were signed in the 1990s, Dmitro says. Russia gave us security guarantees, and now, if we leave, they will want to take more and more territories. Konstantinivka sits about 31 miles northeast of Pokrovsk, which Russia declared fully captured last week. Ukraine has denied this, saying it controls the northern part of the city. Dmytro said he's not planning on giving up without a fight. I count every centimeter of the motherland as important, he says, and we do not plan to give it up just like that.
All right, it's frozen now. Magnum Ice Cream is officially a standalone company. On Monday, the brand completed its long-anticipated split from Unilever and debuted on the Amsterdam Stock Exchange with a market value of a sweet $9 billion. It's now the world's largest standalone ice cream business, home to names like Walls and Cornetto. Here's an update on that mouth-watering deal.
Magnum Ice Cream completed its long-awaited spin-off from Unilever on Monday. The firm listed in Amsterdam with a market capitalization of $9.14 billion. Unilever has shed a business unit which offered few synergies with other food brands in its portfolio, while Magnum now hopes a pure focus on ice cream can help bring productivity benefits. Magnum is now the world's largest standalone ice cream business and home to brands including Walls and Cornetto. Magnum CEO Peter ter Kulve said on Monday the company hit a proud milestone. He said the firm would be more agile, focused and ambitious than ever before as an independent listed company. Magnum holds more than a fifth of the $87 billion global ice cream market. The listing will test investor appetite for a sugar-heavy product, particularly at a time when weight loss drugs have changed consumer trends.
And with that, we come to an end of this edition of Morning Brief at 9. If you have been, thank you so much for watching. But news continues right here on NEWS9, so stay tuned.
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना है। तू भी ले ले यार, अभी तो यंग है यार, बाद में देखते हैं। आजा
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders